Go ahead and identify yourself.
I'm Ben Riggs with Real Reform Louisiana. So, I mean, I know some of what I'm going to say is redundant and almost self-explanatory, but we know storms are what's driving the insurance crisis in Louisiana. We know it from reading about it. We know it from seeing it on the news. More importantly, we know it because we lived it. I know my wife's grandparents lived down in Lake Charles during Hurricane Laura, and I was down there a couple of days after the storm. I've never seen devastation like that, right? But I think it's really important for us to also understand that the industry knows that. Because I think there's so much, not in today's committee meeting, but I'm sure it's coming, but certainly yesterday in Senate Insurance, there's been an effort to I think deprioritize the effects that severe weather are having on our insurance market in order to elevate or exaggerate the effects that some of these other pieces of legislation, including this one, are going to have on our insurance market. I'm concerned because, for example, with the National Association of Insurance Commissioners, they conducted a survey, and a survey of major insurers. And the major insurers said that they will cut out damage caused by hurricanes, wind and hail from policies underwriting property along coastlines and in wildfire country. And I think this is the kicker. Insurance providers are also going to start dropping existing policies in some locales as they become more vulnerable to natural disasters. With the exception of the fires, and after last year, I don't even know that we can include that exception. It just sounds like a description of Louisiana. The insurance companies are telling us they want to limit the policies. I think a lot of the legislation that we see being brought this session is about limiting the ability of policyholders to file claims, and I think they're telling us that they want to stop writing policies in certain areas. When you look at Louisiana's coastline, 1/5 of all named storms are making landfall there. It's a densely populated area. One of the representatives of the insurance industry yesterday in Senate Insurance said that one of the unfavorable, more draconian elements of the 3-year rule was that it actually forced private insurers to create this residual market. And he said he was opposed to that because that is the point of citizens. And the way I heard that was to say, we're going to start, and this is a slow repeal of the 3-year rule is what it is. I think it depends on how many people would be approved in special requests to the commissioner as to how slow that is, but it's a slow repeal of the 3-year rule. And these people are going to citizens' policies. If you're going to the insurer of last resort, then I would argue by definition you have made insurance less available. And if it's statutorily required to be 10% above market, I would argue that you've made it more expensive. And in conclusion, I would simply say I think it's very difficult to argue that we're improving an insurance crisis that hinges on unaffordability and unavailability by making insurance less available and less affordable.
Thank you, Mr. Riggs.